So with that, I'll hand it over to Victoria, and then after they're through with the panel, we will pick that up for discussions from you all. So thank you. Go ahead.
Thanks. Welcome everyone and happy Friday. Thank you for attending this last session for FAP. This conference has been amazing, and thank you for attending the Mitigation Banking in Florida session. Like Jason said, I'm with Bill Kerr and John Lesman, who are two leaders in the industry for permitting mitigation banking in Florida. Every different state has different permitting guidelines, so you have to become an expert within that district. And not only that district, but that segment area, because with the state, not only do you get permitted by the federal side of getting a mitigation banking instrument, but you also need a state permit, and you'll get that from either the Water Management District or DEP, depending on where your project is located. So who am I? I'm Victoria Colangelo, and I primarily sell and market mitigation credits for mitigation banks. But before we get mitigation credits, we have to permit mitigation banks. And it is a long, costly road. And to navigate it takes some expertise. And over the past 20, 25 years, these guys have been in the trenches learning how to do it the hard way and making mistakes and becoming experts in their industry because of it. And so I wanted to have this panel presentation and kind of a fireside chat to talk to John Lesman and Bill Kerr and find out some of the challenges with permitting, because it is very, very difficult. It is not easy. It is not for everybody. And it is a long process. Not only is the permitting process long, but then you come to the sales and marketing and it's another long process. So if you are getting into the mitigation banking industry, if you're a landowner or an environmental consultant permitting a mitigation bank, you have to have these realistic expectations up front so that you're in for the long haul. Because permitting a state mitigation bank could be probably 2 years. Permitting it with the federal in Florida could be 4 to 7 years. And so you have to understand those timing restrictions and make sure that you have scientific expertise so that you can get through the permitting process quicker and easier than somebody navigating it for the first time. So, mitigation banks. This is going to be a, not a 101, this is going to be an in-depth conversation, really getting to the nitty-gritty of permitting a mitigation bank. What are the differences between the state and federal going through the whole process? And there's a lot. But just starting off, how do I change this? There, oops, no, that's not the right button. There we go. So just starting off, what is a mitigation bank? It can be creation, preservation, restoration, or enhancement of a hydrological feature. And so what we are doing is we are fixing broken swamps. We are creating lift. So it was, you know, it is the way it is now. It could be a UMAM score of 3 or 4, and we're going to bring it up to an 8. And so we have a lift, and we can multiply that lift by the amount of acreage that the bank has, and that's how many credits we'll potentially be able to get. Now, we won't get all those credits at once. We'll have a 10% or 20% up front for filing a conservation easement and the financial assurances, and then we'll get them more credits as activity-based and do the restoration efforts. So, as you know, mitigation banking in Florida is a rapid increase. This is a map of all the federally permitted banks in Florida. There are 87, I think is what the number is, or 81. And this next slide is all the state banks, and there's 122. So, you know, there's a discrepancy. Normally, a mitigation bank will be permitted by state and federal, but there are some times that it only has a state permit, and sometimes where it's only regulated by the federal and has an MBI. So, it depends on that. So, what we're going to do today is a little different. We're going to give some questions. Bill, John, and I came up with about 10 questions to discuss the differences of permitting between state and federal, and also advantages of permitting a bank and some ideas, creative, out-of-the-box thinking. So if you have any questions that come up, please raise your hand. This is going to be an interactive, informal conversation. But before we begin, John, I just want you to give a little brief synopsis over what you've done in Florida with mitigation banks, how many banks you have permitted and are working on pending banks, and just your your expertise. I know that you used to work with South Florida Water Management District, so that you have that expertise of working on the regulatory side. And then also, Bill, I want you to talk a little bit about the banks that you've permitted and also the pending banks, because I know you're working on some right now as well. They're both actively permitting several banks in Florida. And John was the chairman of St. John's River Water Management District, so he has that insight. So a lot. You used to be the chairman.
Yeah. Oh,
You
you said John.
sorry, Bill.
It's all right.
Bill.
John can take
Not me,
credit.
not me.
Yeah. So anyway, so I want to get a little bit of perspective from you. So please just introduce yourself and tell us a little bit about you, and then we'll dive into some fun questions and get your perspective.
First of all, I'm going to pull that screen down because I can't see this half of the room and they can't see me. Probably protection, but thank you very much. Just put her in. There we go.
A little bit better?
That works.
Okay. I'm John Lesman, and I started out in environmental consulting in around 1990. And what happened was I was going to grad school. I went to Auburn, studied wildlife biology there, and then I decided I'm going to go to grad school. I grew up in Miami, so I'm living in Miami. I went to Auburn. That's a long story, but ended up at Auburn. Go to grad school at UCF, and towards the end of my time at UCF, an environmental consultant who had a business came walking through the door and was looking for help, and I ended up never thought about being an environmental consultant. I really didn't know what it was, and I think that's one of the big things about this industry is like nobody, at least to my knowledge, I've only known one person who's ever come into the industry when they were in school. They were saying, I want to be an environmental consultant. That was not me, but it was one guy I knew who said that at Auburn. But it was interesting because that was in the 80s, and there wasn't really, that was such a new field. But I ended up in Central Florida, ended up getting a job working in Lake County in environmental consulting, and things have changed a lot since then. That was an era pre-ERP, no concept of banks or anything. We did a lot of that postage stamp mitigation type of thing, and small mitigation projects, usually on site. And back then the emphasis was to do your mitigation on site. That's where the impacts occurred, that's where the wetlands were impacted, then that's where the mitigation should be. Well, a lot of those failed. Those are lessons learned, is trying to figure out how that works. And about 3-4 years later, I got a job with South Florida Water Management District doing permitting. I worked there for 10 years. And during that period of time, the ERP, that was right at the beginning of the ERP program. It just went into effect a few months after I joined the Water Management District. Working there, mitigation banking, the whole concept came about. And back then, it was very mysterious. People who were getting in the mitigation banking area had to take a lot of risks. We talk about the owners of the property, the sponsors of these mitigation banks, the permittee, if you will. There's so many different terminologies. That's one of the things I think is very difficult is terminologies. And when you say permittee for a mitigation bank, that's the owner of the mitigation bank, right? There's the guy who got the company that got the permit. But when you're talking on the federal, we talk about federal permitting, it's called a sponsor. And you don't actually get a permit, you get a mitigation banking instrument, which is more of a legal document. It actually doesn't authorize you to do any groundwork, move dirt or anything like that. You end up having to do anything as far as 404 permit. If you're going to impact waters of the state, and you're in the process, you're going to do anything, you may have to get nationwide permits or maybe something more than that. So there's all these little subtleties that and nomenclature that create issues and confusion. But during my time at South Florida, I got exposed to the whole mitigation banking process, participated in some of the permitting of the mitigation banks, and then saw development take off for a while and just get crazy. Then we moved into the private side again and joined biotech consulting. Ended up, we started moved out into the mitigation banking industry and started trying to get permits for these banks. But during that time, I saw a lot of changes and going on and on. So I will pass the mic on to Bill.
He let me speak last so they could cover everything and I don't really have to say anything.
Well, you're the one that looks good, so.
I started environmental permitting here in the 80s, in the early 80s. Had my own company for 30 years. One of the most fun things I ever did was serve on the governing board of St. Johns River Water Management District for 9 years, because after 15 years of permitting things under the rules, I got to make the rules, and that was fun. I really enjoyed it. And back then, there wasn't budget cuts, and we had a lot of money and at the agency, and were able to buy a lot of property so that it could be preserved for future generations. Mitigation banking permitting is odd. It's not like doing a strip shopping center where you know what the impact is and you know where your mitigation is going to be. You have to fictitiously come up with a way to permit your mitigation bank so you have something to sell. If you're going to get into the mitigation banking business, you need to know a couple of things. Number one, the property that you're going to buy needs to be cheap. Number two, there needs to be a lot of human impact. A lot of messing up of the way the good Lord above made things in the first place. And number three, and probably the most important thing, you have got to be in a basin where agencies are already permitting wetland impacts. Because if they don't permit a wetland impact, you don't get to sell a credit. The other thing I can tell you from doing this for over 30 years is you've got to have a credit to sell. And I've totally forgot what I was going to say. How do you like that?
You gotta have demand.
Right. You gotta have demand. The Corps and the water management districts are differences in service areas. And we can talk about it later, but the water management district has a cumulative impacts basin which you cannot mitigate out of without doing a cumulative impacts analysis, which takes a lot of money. The last thing I want to say is people have already referred to me as an expert. If you know what an expert is, an X is a has-been, and a spurt is a drip under pressure.
Thank you very much. All right, let's get into this. And like I said, please, if there are any questions, please raise your hand. We'd like to have this as interactive as possible. All right, number one. So this is my favorite question. This was mine. What are some creative ways that you've identified to attain more credits in a mitigation bank? And I'll give you an example that I know. So if there's cattle on the property, you can remove it and you'll get more credits. Something like that. What else can you attribute to that, John?
Well, that came up in a meeting recently. One of the things you could do is just land use change. It's an agricultural use, and that is common for a lot of the cheap properties, like Bill was talking about, are in agricultural use, and those end up being some of the types of properties that make good mitigation banks. Mostly because, well, the vegetative components changed, especially if it's been pasture or anything like that. They've eliminated everything and converted everything to pasture, or a lot of them are, at least in some of the banks I work on, a lot of them are also used for sod, generation of sod. And so one of the things that happens is that they've ditched and drained everything in Florida pretty much, but these properties especially, they've tried to control the water. So a lot of times what has happened is they just dug a few ditches and drained off an area. So now these wetlands are stressed, and some of them will have a lot of exotics in them, and the hydrology is all messed up. So you have opportunities there. And you could do, sometimes you could restore hydrology to systems simply by blocking those ditches that were created. The tough part comes in, well, we're talking about creative ways. The land use, changing the land use is a big thing, because now you're taking it out of agriculture, and you no longer have the maintenance of pasture land grasses. You're no longer providing reseeding those areas, and you're not fertilizing those areas the same. You know, you're returning it back to the way it was before man messed everything up. So that's probably the most common thing that I've seen is those agricultural lands.
The other thing you need to be aware of, can you hear me in this microphone, or do I use the other one? Particularly the state of Florida does not want to give you a lot of credit for taking land that's already preserved or protected in some way. They won't give you a lot of mitigation credit for using that land and putting it in a bank. So I suggest you go to your future land use maps at your county level and find out what the future land use of the area is. And if you have an opportunity to select one place or another, I would select your bank where your future land use says it's going to be commercial or residential or something like that. Because then there is an ability to reduce that development and make it a mitigation bank, and you can get a lot more credit for taking something out of future land use of residential or commercial development and putting in a mitigation bank, versus going to a pasture like John was saying, and you have agricultural zoning, then that's sort of semi-environmental protection, and you don't get as much credit for that.
Another thing to look for, just think about what you said, is you really need to find a piece of property that's next to some other type of conservation lands. That's an important factor. It's part of it's virtually part of the criteria for a mitigation bank in the state regulations. So in that, what it says is that you can't have adjacent land uses that are detrimental to the property. Well, if the adjacent land use is already in conservation, well, that's great. And there's not going to be a conflict there. But if you're going to have, if the neighboring property is going to be a landfill, that's maybe a problem. And or industrial area going to be converted to industrial, that would be a problem. So you got to keep that in mind. Also, you're expanding existing conservation, so you're talking about wildlife corridors are being expanded and things like that. And I mean, everybody's looking for that. I think one of the things that everybody looks for is that you get in a real good position if you can find a piece of property that connects to disconnected properties that are in conservation. You create the proverbial hole, you fill in the hole in the donut, so to speak. So that's
right.
The other thing to think about is what you're going to do when you get the end of your mitigation bank and you've sold all your credits. You got to put up long-term management money, so you got to figure out how to get out of it. So if you have an opportunity and you find to pick a piece of property next to something that the water management district owns already or the county owns already, and that way when you're through and you've sold all your credits and your management is just routine, then you can give it to somebody who's adjacent and they're willing to take it, and then you get out from underneath the long-term management of it. Take a tax write-off at the same time.
And because Joe and Cliff are here, is they're probably going to have to include when that transfer happens is a little land management money is going to have to come along with that. So, but it is very important when you do that, when you have adjacent, you created a mitigation bank next to existing conservation. One of the things that's really an advantage to having that come under one manager is now, when you mobilize to do something like, let's say you have to do prescribed burns or something like that out there, they can do all the areas together. So you don't have to have two different separate mobilization processes, mine and then and Joe's go out there and on his property, combine the two. So it's a lot more financially effective.
Okay, next questions. There are so many differences with permitting a mitigation bank with the Corps and the state. Which issues are the biggest challenges that we could possibly streamline better? I know this is your favorite question.
Yes. I think the federal process, federal mitigation banking team in Jacksonville, they have like 6, 7, 8 people, I think, total in that department, and that's a big challenge for them. And so there's a manpower issue up there, and they cover the entire state. That creates some problems just getting things done. You know, that's the workload issue. There's all this making. We have how many mitigation banks you said were? I don't know how many are in process right now, but that's a huge burden on a small number of people. At the same time, the water management districts, they're pretty much taxed out. They're trying to do, and they're very effective at what they do in mitigation bank permitting and reviewing applications, getting things going. But you know, they also have to do all that compliance part. That's a high demand on manpower. But at least the state has, they're more regional. It's more effective for them because if you're doing a mitigation bank in this county, then you know it's going to be Southwest Florida Water Management District working on it. They don't have to go all the way up to Duval County or down to Collier County like the feds would have to do. So they're more strategically located. The reviewers will be more strategically located, and also they're more. I think they by the fact that they're in that area, they're going to be more familiar with the types of habitats and the problems and challenges in those areas. So I think that's part. As far as getting those two aligned, that's the big issue. It would be nice to have them more aligned. The federal process is a much longer process, so they can't go together. And they're supposed to go together, sort of. But there's some challenges there, like especially if you're doing something like hydrological improvements. You're going to put in ditch blocks, or you're going to do some other weir structures or whatever, and you're going to be putting the water management district is going to take they have engineers that are specialized at looking at that hydrology, and they're very effective at that. And that's something that I think the Corps doesn't have that resource. They actually, I believe they pretty much rely on the district's permitting. So you have to get elements like that done up front, because that's going to affect everything you're doing. It's going to change all your assessment areas, what kind of management is done. And if you know that this area is going to be a restored wetland, so now maybe it's an upland now, used to be a wetland, and you're going to block a ditch, and it's going to cause that area to rehydrate, and it's going to revegetate with great vegetation, wetland vegetation. You have to get through that stormwater hydrological model and improvement, and get it reviewed by the water management districts, and because there's several elements here that come into effect. First of all, the feds do not be able to do the same level of review, and they don't have to do that same level of review.
Well, actually, you have to have the state permit water quality assurance before the Corps of Engineers can issue any kind of permit.
And so your state permit actually has to be there before they can issue any permit, any kind of 404 permit. That's water quality certification. So that part is very important on the hydrological aspects. Very important because you have things like that you can't do. Off-site flooding. If you're going to be blocking a ditch, it's going to affect everything upstream. Now, part of that is right on your site, I'm sure, but then that system goes off-site, and all the water management districts, when they came in, it's the basis. It's probably the basic principle of the water management districts has been flood control. That's how they started. It's like that's the origin of the so you could start with that, and so that's going to be a very important aspect and a limitation for your project. And I don't know how many we have that have hydrological improvements, but there are many, and it's very effective in generating credits. It's very important to get that aspect. So streamlining the process would be nice, but you almost have to do certain parts of it up front at different stages.
Well, I don't know how long ago it was that we got UMAM accepted.
2005.
Pardon?
2005, UMAM was adopted, which is the Uniform Mitigation Assessment Method, which is the new credit way of evaluating.
It started out as the Florida Unified Mitigation Assessment Methodology.
That's right.
But that's not a good acronym, so they changed it quickly.
How many FUMAMs do you need for this?
I wasn't gonna say that, and let their imagination run wild. So whenever that date that Victoria said, they did get the Corps of Engineers to accept the Unified Mitigation Assessment Methodology, so that is good. That is some kind of correlation. The Corps of Engineers has a time lag, which is a function of the UMAM thing you have to consider. The time lag for the Corps of Engineers is different than the time lag for the state of Florida. So you will get a difference in credits based on that. Also, the Corps of Engineers doesn't like to give you any credit for uplands, preservation, or whatever. The state of Florida thinks, wow, there's uplands there, we can develop that, they could develop that, so the state of Florida gives you quite a bit of credit for uplands. Sometimes more credit for preserving and improving the uplands than the wetlands. The Corps of Engineers will only give you credit for, well, a wetland buffer. You can't have an isolated wet weather pond without an upland surrounding it. So I've been able to work with the Corps of Engineers and say, well, we need this much upland surrounding this isolated wetland, so they will give me some kind of limited credit for that upland preservation. They don't like to do it, and you have to be creative with them. But the UMAM is similar. The timelines are different. The time lag's different, and the service areas that the Corps of Engineers has, they use HUC basins, and I don't remember what the acronym HUC stands for, Hydrological
Unit.
So, but the water management districts, they do it on a cumulative impacts basin, and there are differences in the state of Florida between South Florida Water Management District, St. Johns River Water Management District, South Florida Water Management District. As an example, South Florida has like 8 basins, cumulative impact basins in their entire water management district. St. Johns River Water Management District has 23. South Florida has more than that, but for all intents and purposes, south of Orlando, south of Lake Kissimmee, the wetland habitats are very similar. So South Florida allows different cumulative impacts basins or service areas, and the staff at South Florida, establish those areas. So if you're going to do a bank in South Florida, we haven't talked about pre-application meetings, but you should have one with the Corps of Engineers and the Water Management District. But you go in and kind of say, this is what we want to do, and you get the agency feedback. And it's particularly in South Florida, they say, well, if I'm going to put a bank here, how big of a service area are y'all going to give me? And you can talk about it in generalities. Don't think you're going to get all your answers up front, because you're not. The agency has to be thoroughly familiar with what your project is and what you're going to do and what your success criteria are, what your credit release is going to be, before they can even really decide how many credits you're going to get. One of the biggest problems that I see that the agencies are getting better with, but is to, as an owner or a consultant, you want to get as many credits as you can reasonably get, and the owner does their pro forma based on that number of credits. Well, in the early days, I didn't do them a good service because I thought it ought to be worth this many credits, and by the time I got through the process, at the end, some 2 years later, the Water Management District says, oh no, you're only going to give about half that amount of credit. So one of the things you have to do is get in early with pre-application meeting and get some kind of order of magnitude of the number of credits that the agencies thinks that this project is worth. And then you can conservatively base your pro forma on that.
Yeah, that's a great point. There are a lot of misconceptions that you know everything in the beginning, your service area, how many credits you have, but like Bill said, it could take 2 to 3 years and you thought you were gonna get 200 credits, and all of a sudden you're gonna get 100. And so your performance is completely off base, and you either have to double the price, reevaluate, or you're out of business. So, yeah.
That's another thing that kind of pained when you said that.
Yeah.
We're talking about multiple years to get something permitted, and sometimes the regulations can change, the rules can change, the mitigation. That happened in 2008 with a new federal mitigation banking rule, and changed things dramatically. You could get caught in that if you're starting the permitting process now. There could be a rule change during that process because your permitting process takes so long. One of the things that's coming up I think it's February, where the new WOTUS rule is supposed to go into effect. Well, that affects everything. It's if suddenly the extent of jurisdiction that the federal government has over waters of the state expands or decreases, that kills your performance too. And so because not only from both sides, from both sides, but of course the demand side suddenly changes if, let's say, it decreases the amount of the reach of jurisdiction with the federal process. So now not as many areas are jurisdictional wetlands according to the Gore. If that's the case, that means you're going to have less wetland impacts, federal wetland impacts. Well, that knocks your perform off. It could go the other way though, and so we don't know what's going to happen. We don't. That rule probably will be challenged in February. It's unlikely that it's going to go into effect then, but those kind of things can happen. Is the point? So it's what did we say last year when we did this? It's mitigation banking is not for the faint of heart. It's constantly evolving. There's different rule changes that occur when it's blood. We have that going on with some of the financial assurance aspects with that are the requirements that the Corps has for mitigation banking that are changing right now. Affects your performance. So it's a difficult thing, not for the faint of heart.
Absolutely. All right, let's go to the next slide. All right, here a technical question. What size of upland buffer around wetlands will the Corps accept and give credit for?
It depends on how persistent you are and who the Corps representative is. But I have gotten anywhere from 50 feet to 250 feet as credit.
Can I ask a question? I understand what you're saying. Did you count those buffers as their own upland assessment area? How did you quantify that?
I gave them 50% of the wetland restoration. So if they had been a wetland, and I was going to you asked me a convoluted way to do it. This is the way I'm doing it. Your wetland is worth, and your restoration of your wetland is worth X. Let's just pick 10 credits, just to pick a number. All right, that wetland wouldn't be there unless you had the uplands. You first of all say, well, how far can you go into the uplands? And what I do with that is do hydrologic analysis so that this rain's got to rain here so that the groundwater gets recharged and it drains to the wetland. And then a number that I've just picked out of the air was 50% of what the value of the wetland restoration was. And that's flown. Don't ask me why, but that's what happened.
So in your UMAM scores, did you quantify it as a separate assessment area as an upland?
Yes.
You did.
It's a separate assessment area.
A separate upland assessment area, and they accepted that.
It's a drainage basin. It's this estimated size of the drainage basin that hydrates the wetland. And that's how I got there.
What reviewer accepted that?
Pardon?
What reviewer accepted that?
They will remain anonymous. No, there's 6 people up there now. 3 of those people have agreed to that analysis. in different formats. Some people say no, there's not a hydrologic effect out 200 feet. It's only a hydrologic effect out 50 feet. It's a negotiation.
Bill, I don't understand if you can do it that way, then and one reviewer doesn't accept it, the other one, and doesn't give you credit for it, and the other one does, isn't that going to affect your performance?
Yeah. But this is the art of permitting a mitigation bank.
Oh, I love that. The art of permitting a mitigation bank. See, you guys,
So it'll be
see
the
that
topic next year.
these landowners that have land, they really put all of their trust into an environmental consultant because they don't know all this jargon, and you come, back and say we have to do this and that. But then it's not only luck of getting a good professional, but also the luck of getting a good reviewer. So you really have two, components that will really play into permitting a mitigation bank.
Yeah, that's probably one of the things too, is that I that's good for, in the water management district, a lot more, I think there's a lot of consistency because they work in that one area, and they also work probably, I guess it's that, but it's there's a lot more consistency. I think they work on that, where there's a the core reviewer has a lot more discretion in terms of what they perceive, and I don't understand. I don't quite. It's difficult to predict what's going to happen, and frankly, the process evolves year by year. I mean, it changes all the time. So we kind of have to predict. Your prediction is based on a lot of speculation.
And one of the things that I think would really help, and this goes back to the previous question, streamlining. We did UMAM when?
2005.
2005. How many of you all here are environmental consultants? How many of your environmental consultants, how many times have you done a UMAM in conjunction with the agency that's permitting you? Really?
When you say that, what do you mean?
Well, what I mean is, I do my UMAMs and I present them. The agency that's reviewing it, whether it's the Corps of Engineers or the Water Management District, they don't even look at them. They come up with their own, and then they deliver me theirs, and I compare it to my UMAM to begin with. I think it would be more highly effective to have a consultant. I mean, people have been doing it 30 years. People have got all these kind of, degrees and professional experience. And I think it would be much better to have the agency and the consultant work on the UMAMs together. That way they could work out their differences. Yes, the agency has all the power. The consultant doesn't have any power when it comes to applying the rule, but I think it would be more consistent and more representative of whatever project you're doing, whether it's a mitigation bank or a strip shopping center.
Right.
Will it ever happen? I have no idea.
And another good thing that I wanted to bring up is not only do you have a reviewer with the Corps, but you also have an IRT. So you have another layer of about 3 people that are going to give feedback, and that comes at the end, and that can really delay the process if they have any issues or comments. And
Coordination.
yeah, it could almost start over the project.
Well, when you do your pre-application conference, after you do that, then you've got to write what they call a prospectus for the Corps of Engineers, and then the Corps of Engineers will write you a letter of appropriateness. That's when you should have the IRT out. Right after the letter of appropriateness says, yeah, this is a good place to do a mitigation bank, then you should work to have the IRT come out immediately, because the Corps of Engineers has to respond by rule to people like National Marine Fisheries and U.S. Fish and Wildlife Service and that kind of stuff. So you got to have them all there in the front, meet with them on site, and get general agreement about what you're doing, and that helps your process later on.
I'm going to throw out a question. John and I were talking a little bit before the presentation, and I wanted to get your feedback, Bill, and also John. Because it takes so much longer to get a federal permit, do you think it's a good idea to start the process first with your prospectus with the Corps, rather than starting with the state at the same time or initially before the Corps?
Well, I'll take the first shot at that. St. Johns River Water Management District, actually would like you to get your federal letter of appropriateness before you ever do a bank. That's not the way it works in Southwest Florida, nor is it the way it works in South Florida. I always find that the longest process should start the earliest. I didn't used to think that. I used to think, well, we'll get our permit through the state and then we'll get the permit through the feds. But with the IRT, which the state is a member of, that's the interagency review team, you got to have everybody on the same wagon. So it's better to get them out there early, get them looked at, start your federal process before you start your state process.
One of the challenges, like, where everybody's in a hurry to get the permit, obviously, it's like, that's what the goal is. But one of the things, I think the pre-apps are huge, because you get everybody's initial perspective, not like that, but especially if you have hydrologic issues, you're gonna be making changes to the hydrologic features on the site. So you're gonna have some stormwater issues and things like that. I think you have to, and that's gonna affect pretty much what you can and can't do. So maybe you can't do any of that hydrologic modeling because it causes off-site flooding the minute you put in any kind of ditch block to any degree. In those situations, I think the focus needs to be on getting, this is really almost part of due diligence. You almost have to get that part done. So you're doing a whole bunch of stuff there. And you should go into that pre-app meeting with some of that information. And that would help especially with the water management district. That's gonna help a lot, because right away they'll have, okay, you looked at some of this stuff, because if it turns out you can't do that element, it changes the entire plan. So if you went in with a prospectus at that time, it'd be premature, because you go in with the prospectus at that moment. And you should get in with the prospectus as soon as possible to the feds. It's important that you have that worked out, because if you change too much, your plan changes too much, you may have to go back through that process again. And so I think that due diligence part is important to emphasize. But yes, I agree. It's good to get into the prospectus. So that's the longer process that's going to occur. But you're going to have to work out some of those issues. It's good to work them out.
Good. Okay. When we were coordinating this presentation, Bill and John got off on a tangent, and we really were talking about the challenges with the new Gore MBI template. And some of you may know that sometimes they just change the template, and it happens a lot. And you've got to not only renumber pages and lots of different technical things, but now they're coming out with a lot more guidelines that we're not even used to, and we're having to change. And so that's just the nature of the beast. But will you guys speak on these changes that we're going through right now?
It's a real good topic. I don't think there's ever been a final template for the MBI. It's an evolving template. So what happens is, that's one of the things that's difficult about the process, is you put this huge document. MBI, it's going to be 300 pages, something like that. And so it's going to be a large document. And format, if you have to have it in a certain format, but that format could be changing while you're putting it all together. It just changes, so it's a moving target. That's very frustrating to me. And I think that's one issue. I think the thing we're talking about is, Bill, you brought up the change in the financial assurances part.
Yeah. From template number 207 to template number 208, and I really don't know how many templates there were, but there were a lot. At the back end, at the very end of the template, you need to read very carefully, because the Corps of Engineers is requiring almost 50% more money for your financial assurance than they used to accept. That could really mess up your performance. And for a couple of clients I've worked with, it's been anywhere from $1 million to $500,000 that they have to put up in addition. And also the Corps of Engineers in their new template, they're pushing more credits toward the back end of the permit so that you go through certain success criteria, meet those success criteria, and then you get your credits released. The Corps of Engineers only gives you 10% of the wetlands that were initially on the site as to be released when you put up your financial assurances and do your conservation easement. Then they used to give pretty significant, I worked on a permit that I got 8 years ago, and I was able to get like 30% of the credit release, 40% of the credit release for doing everything I needed to do physically to restore the hydrology. Well, they've broken that number down in and taken probably 75% of that 40%, I know this is confusing, and put it at the back end. What it really means is you've got no product to sell until you do extensive work, spend extensive amount of money, put up your financial assurances, because you have to meet your success criteria before you can get 80% of your credits released. And that, it takes 5 years to do your permit, and then it takes a year, maybe or two, to get to your first level of success criteria, and then it takes you 5 years to get to the majority. So the Corps of Engineers is shoving all your credits to the back, and you won't have any credits to sell. So you've got to be really careful.
Great, thank you. Any questions? All right, let's move along. All right, what is the difference between the Corps and the state agencies in the amount of credits released for the construction and implementation and perpetual management, escrow funding, and recording of a conservation easement?
The Water Management District will release between 20 and 25% of your credits for putting up your financial assurance and doing your conservation easement. Corps of Engineers, as I've already said, will only give you 10% of the existing wetlands on the site. I have recently been able to get an early release of preservation credits up front for the Corps permit, but that's new, and I don't have a lot of experience with it, but it may be one way to get more credits released up front.
I have nothing to add though as well.
What challenges do you have with hydrological regulations with the Corps?
Oh yeah, that's a good one.
The Corps doesn't do hydrological restoration. The Corps doesn't, as far as I know, don't have any staff to look at that. They depend on the state of Florida for doing that, which is why John said you need to know what your hydrological restoration is and what you can get approved with the state of Florida before you work it out with the Corps of Engineers, because the Corps depends on the state to do it. The state has the engineers to do the stormwater stuff, and the Corps does not.
One of the things that, along with that too, and just in general the permitting, was the Corps really wants to see at least one growing season worth of hydrologic data. If you're doing hydrologic improvements, you're going to have to collect baseline before they issue the permit. It used to be that you could collect baseline data after the permit was issued, and it would be structured in that way so you get your permit faster. Now it's really critical that you identify your different assessment areas, and you put in monitoring wells, water levels you're looking for, and start collecting data as soon as possible. And that's a challenge, because one of the things you have to do is you're gonna have to make sure you're kind of taking a little bit of a risk, because you haven't started the permitting. You haven't got a permit yet. You don't know for certain everything's going to be accepted, so you have to figure out what you think your assessment areas are ultimately going to be. So if you have all that hydrologic information, it's going to be a huge advantage. But you have to put in these wells in those areas, and what I would recommend you do at that point is that's when you talk to you try to get from the Corps some kind of verification. Yeah, I agree. That's a good place to put those wells, and then. Those are the appropriate locations, and then start collecting that data right as soon as possible. And you're gonna be, what you're building, I would say the core does not, they really don't care about what's intuitive. You know, it may be pretty obvious that you're doing something really, really good. They're really about that administrative record. It's like they want to have documentation that backs it up. And that's kind of, it's just more of, think of it like more of a legal thing. That's kind of how the system's built now. You can pile up the data, it's gonna help you in getting it, it's gonna help you with your UMAM. If you can, like, you can show them baseline vegetative data that shows that this wetland has 60% exotic coverage in there, versus saying, look how bad this system is, I want 5 points of lift here. You know, they're gonna be more about, show me the documentation, even though it's obvious. They wanna see and have something on paper.
Okay. Financial assurances. Financial assurances. Now, this is not an easy topic when it comes to mitigation banking. It's very complex. So let's dive a little bit into this. How much can a mitigation banker anticipate to need to invest for short-term and long-term financial assurances? Now, I know it depends based off the water management district they're in and based off the acreage. Is that correct? Tell us a little bit more on how that's evaluated.
But the state rule says for your construction implementation that you have to put in your financial assurance 110% of the estimated construction costs, which includes planning or whatever else you're doing. For the project, for the PM, it's an estimated 6%. That's what's in the state rule. I don't know if anybody knows getting 6% investment, let me know. But that's the way it works. So I just have these numbers in my head. If your annual operating expenses are $75,000, you got to put up 1.25 million to generate the 75,000 at 6% interest. So those are the two numbers that you got to use at the state. The Corps of Engineers, as I said before, is now doubling their amount of money that you're supposed to put up. So you've got to get in your pre-application meeting some kind of input from the Corps to figure out how much project management money and construction implementation money they're going to want.
And it's a very this is in particular an evolving thing. We had the workshop back in February, I think it was, with the Jacksonville mitigation banking. Well, anyways, at that time they were talking about, well, at 6% is definitely not appropriate. That's not reality today. So 6% return, you can't use that figure. But what do you use? And then they started. It really got confusing. There's a bunch of people asking questions on how this is going to be done, and they really didn't know. So it's a volatile issue at the moment.
Well, the state rule is going to be difficult to change. It's going to take a long time to get that 6% changed because you have to have all 5 water management districts in the DEP in agreement, and they all have to have public notices and public meetings and that kind of stuff. So, and it's likely to be challenged, like any rule change. So, is it going to happen quickly? No. If anything moves in the government quickly, you better wonder what's going on, because it doesn't really happen that quickly.
What role does prescribed fire play in enhancement and restoration, and can it get the banker more credits?
If you have pyrogenic communities on your mitigation bank, you're going to have to burn them, and prescribed burns are going to be a must. And that's the only way you're going to get credit. It's going to have to be part of that process. So yes, it will definitely get you more credits. Matter of fact, if you have a pyrogenic community that you can't burn, you're probably not going to get any. Unless you can do something like roller chopping or something like that, something to take that place, but basically you have to burn pyrogenic communities.
My suggestion would be to burn it early and as quick as you can. That makes construction a lot easier.
And what about with challenges with burning, Bill, with banks that are near a roadway?
Well, you can't. Most people burn in the winter because your cold fronts come through and you can figure out which way the wind's gonna blow. You cannot legally cover with smoke I-95, for example. So if you've got a mitigation bank near a major road, then you're gonna have to look at the prevailing winds and see how your management's gonna be able to work out, see whether that can be done.
Is there a specific amount of hydrological restoration that increases the amount of mitigation credits?
The biggest lift I ever got on wetland restoration was how I could prove that a different suite of animals would be using the wetland. Let's say it's a wet weather pond, an ephemeral pond. Well, years ago, it was in the floodplain of the St. Johns River, as an example. So if I can fill this ditch and raise that water 2 or 3 feet, I can show that the critters that use that wetland are a whole different suite. They use their emergent wetland critters rather than ephemeral pond critters, and I got a lot of lift for doing that.
And I think, are we running out of questions or time? All right, let's do one more. Let's do the last one. Is there a way that the Corps and the state of Florida will release credits earlier in the process? Great question.
Well, you can, I think the best plan of action there to accomplish an earlier release is to just, if you have an area that you're planting or something like that, you can plant it with larger specimens that are going to, especially in forested systems, if you plant larger trees, they get a jump start and you'll be able to pull it down, but you have to balance that against costs. So it's that's that, you got to find the point on the curve that maximizes your effectiveness and profitability in that case. How important, like for instance, there's been banks that we've had that we got a pretty good credit release at the beginning, but there's not really a lot of demand. It's way more credits available than what the demand is at that time. You can gain some, you can financially it'd be a better idea to you can scale back your mitigation for a while and let everything grow in. You can plant smaller plants because you have time, because your absorption rate is not great enough to the existing number of credits you have is going to hold you for several years. So you don't have to plant larger species. So you can take your time, basically.
Larger species are more expensive, and if they die, then the percentage of death, you got to have 80%, is greater. And it's oftentimes, if you do your financial analysis and you have the time to plant the smaller trees, because then 20% death on a larger number of trees is less trees dying.
Wow, wonderful.
Talk to your land manager too. They're going to have a lot of ideas about the best way to. So especially in pyrogenic communities, you're going to have to get the pines up to a certain level of height before you can do a burn. Otherwise, you'll just kill the trees. At the same time, you can plant denser trees, seedling trees, and that'll force them to grow faster and higher. So that's the reason why they plant them so dense on pine plantations. That forces them to grow faster, and then they come in with a cleaning cut or a thinning cut and thin them out after a while because they reach a different point in time to already maximize that growth.
Great. Well, thank you guys so much. That was an in-depth perspective on mitigation banking. And does anybody have any questions from the audience that we haven't covered? Lisbeth?
How do you see that House Bill 521 affecting the industry?
Great question. The House Bill 521, how will it affect the industry?
Allowing mitigation on public lands.
Well, when we first started years ago, they did allow. When the mitigation banking rule was originally written, water management districts and state agencies were supposed to do banks. But that's not how it turned out. There are 2 or 3 banks that I know that are still state run. I see it as an opportunity. I don't think you're going to get a lot of additional credit for it because for the most part, publicly owned land is protected. And so you're going to have a credit reduction. But it just opens the opportunities. I think the way it's written now, and I haven't seen the latest bill, I think the way it's written now is that that you can do that if there isn't another bank in the area, all right? I think that's the way it's proposed. So I look,
That got passed.
that got passed, okay.
And that's state and federal credits. So if there's state credits available and not federal, then you still could not use offset. You have to have, both cannot be available from the way I interpreted it. Yes.
What we're finding in, I do local land preservation, is that for the past couple decades, we went through and got all the best stuff. Now we have to do the connections. The connections are frequently the broken swamp, and they have some perspective. Even when there is an existing bank, the local government can use the lift that they create on that bank for their own credits and FDOT. The reality is they're probably somewhere between 40 and 70% of the market.
It's on House Bill 521, that's something to keep an eye on. I think I wouldn't be surprised if that came back in another bill to change something in future sessions. Probably I would see that there's a chance that they may try to strike the "and" feature that's in there between having the requirement that there's no federal and state credits. I'm sure they're going to want. I would think that they would want to remove that "and" from there, and so that it would be only one. And I don't even know why in state legislation that they would mention federal credits, and that was curious, and so that's I think what the big issue for the mitigation bankers is to make sure that that's an even playing field. We have to provide financial assurances, which is a great expense, whereas if the problem was if a bank was being done by a municipality or government, they may not have to provide those. And
Or
so,
land costs. It's already a sunk
land costs
cost,
already there.
You know, so they have such an advantage, so.
So now, that's a tricky part of that same legislation. Is the big question is whether or not that language is saying that they have to provide financial assurances, and I've heard different interpretations of that. So that's another aspect of it.
Most mitigation banks in Florida are large pieces of property. In your experience, have you ever had any problems with existing easements, utility easements, power line easements, dramatically affecting your credit yield? Or not even easements, but linear parcels that are owned by other entities, usually utilities, retained parcels, and they may segregate or separate portions of your bank, but still they'll always be easements. Have you ever seen dramatic credit releases or credit issues because of that?
I did a 5,000 acre bank in Indian River County. We had gas line go through it and a power line.
Mm-hmm.
We got no credit for anything in the gas line.
Right.
No credit for anything in the power line.
Right.
And we also got reductions in credit value within, and I forgot the number of feet of those transmission lines, gas transmission lines and power transmission lines, because the agency that owned the easement could come in there and mow it down anytime they wanted.
Now, we've had projects where it was an existing piece of property somebody had owned for a while and they wanted to do it, and then it pops up that there's mining rights, and that's one thing that mineral rights are an important thing to look for right away, because you can buy the mineral rights back from a lot of the time, not every time maybe, but a lot of times they do have those companies that have those rights. They'll do an evaluation, and remarkably, what was it, a couple of years ago at the one of the mitigation banking conferences, I think maybe it was Louisville, when we were up in Louisville, a couple of the representatives from one of those companies came to the conference because all of a sudden they were getting requests for people to buy back the mineral rights, and they didn't understand why, and they're thinking like, well, I'm sure they have dollar signs rolling in their head, so it must be valuable to these mitigation bankers. But there's that the aspect, there's different types, especially in mineral rights, there is different types of mineral rights. Some of them don't provide any access to the property. So it's only if you own the property and there's a mineral right, somebody else has the mineral rights. It may be that only if you are removing yourself or are trying to get those minerals out of the ground, they would have the rights to a percentage of it, maybe 100%, but whatever it is. But they can't physically come on your property because they do not have access. That's a totally different situation. It's perfectly fine. You do a mitigation bank on that property.
Right. You don't have to buy the mineral rights in that case because they have no right of access.
But the agencies are gonna wanna see a title policy that says there's no right of entry.
Right, and you basically, the times that has happened, there's been a attorney taking care of that. We've had projects, on different cases, we've had projects where we suddenly found that there was an easement on the property that was not noticed before, and we're well into the permitting process. Luckily, it was just like a 20 foot telecommunications line that ran down the boundary of the property. But it really was a problem for me because all my exhibits don't show that, and we haven't addressed that at all. We're going back and having to fix everything in this large document, and it's a pain in the neck when that happens.
Did they deduct a distance off of that like they did for Bill's project, or did they just remove the actual?
I will let you know. Don't know yet.
Well, usually for underground stuff, unless it's constant maintenance,
Right,
then they don't get too upset.
right.
But in my case, it was a power line and a gas line, double wall gas line, and then if anything happened, the gas line could blow up. So
Right.
they knocked me pretty good on it, and rightfully so.
Do you remember the distance?
No, I don't.
One more question.
In situations where there may be some trail easement through a piece of property, how much has public access impacted the UMAN credits?
I've not had any reduction in credits for public access at all.
Yeah, it's like, I haven't really run across that. We've had, not in the way that you describe it. The water management district's a little more, we've only really had perimeter type situations. We never really had one that goes right through the middle of the project. And I would say that, the big thing is if there's we never went through the process on it, but I think the big concern would be if there's gonna be, what's the degree of use that's gonna occur with that trail, if it's limited, for instance, with hunting rights. You can have hunting rights on mitigation bank properties, but typically it can include leases, like and you can have a lot of people. They wanna know how many people are gonna be out there, that kind of thing, and that's kinda in tune with what the trail situation would be. It's like if somebody's just gonna walk through there once in every blue moon, who cares? But if it's something that could be used a lot, that would interfere with wildlife use and things like that, then that would be an issue, I would think.
Well, if you didn't know before this presentation how intricate it is to permit a mitigation bank, you now know. So thank you so much for joining us. Go have lunch, enjoy your Friday, enjoy your weekend, and if you have any questions for Bill, John, or I, please come on up. Thank you so much.